going through euro dollar chart for quite a while to define a valuable Fibonacci wave. I went through multiple time frames, multiple waves, etc. But the wave between the 10th of May and 12th of April 2015, pretty much last year this time, that wave has given us good levels overall. And if you look backwards, how I define this level as a valid Fibonacci wave is for the fact that I look for 61.8 or 38.2 or zero line to behave or to act, and we can see that this wave has acted on the zero level over here on the week of November the 29th. We have seen that this wave also acted very well on September the 20th, and so far it's very strong level on 88 level as well. Just this year it has acted majorly. On weekly time frame, we can see that our MACD, those of you following me in general know that I follow MACD and moving averages mostly. So MACD is on the bullish side on weekly time frame, while the moving averages are mixed. 200 moving average is sloping downwards and above the price line, while 50 moving average is also sloping downwards, staying flat, but below the price line. On daily time frame, the moving averages are below the price line. They are pretty much flat. MACD is above zero line but sloping downwards. We see that the pair is bouncing off the 100 level, and it has gone even below the 88 level. And I'll go on the hourly time frame for us to be able to define the entry level where we could actually take advantage of the market. So at the moment when I look at the market, I can see that the price action is also on the bearish side. Moving averages are sloping downwards. Price action is giving us bearish entries. By the way, we will have another price action training on the 12th of May. Follow A to Z Forex. You will see that level 12th of May is specifically for price action, how it is done, what to look for, etc. So if you look in the price action wise, I can see that we have a resistance at 1295 level, which is basically just below the 200-hour moving average, and it's basically just below the highest high of the previous way, basically Friday's highest high. So we will be looking for potential sell orders from 1.1295 to 1.1305 levels. This is gonna be our entries. Meanwhile, let me just basically draw it for us to show you why I'm looking at this level. So this is the level that I'm looking for, 1.1298, and our stop loss is going to be somewhere over here. I'm going to mark it as a red one over here so that you can define the difference. So we are looking for 1.1335 level overall. In general, it's around 35 to 40 pips of stop loss at its worst. And the question is, where is the take profit? Of course, the first take profit that we are going to be looking for is going to be at 1.1230 level. This is the previous support level that we had. The second take profit that I have is at the 61.8% Fibonacci retracement zone, and it's at 1.1105 level. And finally, last but not least, I'm looking for 1.0995 level as my final take profit level. This is overall my bearish entries. I don't want to go bullish on this pair unless we see a clear break above of 1.1330 level. If that is so, we can then consider potential bearish entries, bullish entries for the pair. One of the questions is, are these levels from the weekly Fibonacci levels? Yes, it is. They are all from weekly Fibonacci. As you can see, we draw the Fibonacci from the highest high of the week of May the 10th last year to the lowest low of week of April the 12th last year. And all these levels that we are giving is just on the weekly time frame. So it's not on hourly or so. One more time, let's go on hourly time frame to define these levels for you one more time. Basically, we will be looking for entry level between 1.1295 to 1.1305 level. Once again, 1.1295 to 1.1305 level, and stop loss is gonna be just above 1.1335 level. Take profit levels at 1.1230, then 1.1105, and last but not least 1.0995 level for the bearish entries. Basically, I look for the support resistance levels to define the entries, and I follow the price action for these things. Now let's move on to cable GBPUSD to see what's gonna be happening for the cable. Of course, you know that there are Brexit fears all over, or at least it appears so. Although Brexit is supposed to put the cable under pressure, we see that the price action is not actually following the bearishness, at least not for now. But are we actually expecting to see bullish entries? That's the main questions for most traders. For those of you following harmonics, you can see that there is kind of a head and shoulder over here formation. We have the head over here, we have the left shoulder here, right shoulder here. So if that is the case, generally you should be aiming for basically, let me draw it, to 161.8% of it. If you would have followed it, I'm going to change the color of this Fibonacci over here so that you can see it clearly. You can see two Fibonaccis that I have drawn so far. One is the main Fibonacci, that's the green line I have drawn so far. You have to understand how I look at the Fibonacci. So go on A2Z Forex and try to find one of the videos that I have on A2Z Forex about the introduction to Fibonacci waves. So the first wave that I'm looking for is the week of the highest high of the week of 27th of December 2015 to the lowest low of the week of January the 10th 2016. This is the first one. We look for basically the bearish market move, and the second wave, which is also a real Fibonacci wave, is the last one that I have just drawn here. You can see that these waves are really colliding to each other, and the most important level for these waves that we are looking for, if the head and shoulder that I just talked about is going to be acting well, we will be looking for an overall take profit target for bullish entries at 1.4760, 1.4780 level. This is the 138.2. But overall, the main swing cable pending buy sell limit orders should be at 1.4933 level. If you are able to put a pending sell limit order for this pair, you can place it at 1.4935 level and just forget about it. Your stop loss should be just around 100 pips. So have a stop loss of 1.5043, 1.5050 level more or less, and your take profit afterwards should be basically to the lowest low of the wave that I'm just pointing at. It's at basically 1.4610 level, and it collides pretty much to the level of 110% Fibonacci retracement zone, which is also at 1.4580 level. However, let's look into the short-term market on daily to see where we can really expect a current take profit target for the bullish entries if you are into the bullish market. The current market move, as I commented, is from price action perspective is on bullish side. We can see that there are higher highs and higher lows at the moment, but there is a resistance at the level of 1.4515 level, and I'm convinced that this level is going to be acting as a strong resistance level. So therefore we will be looking for a short position. It will be a correction short position at 1.4520 level with stop loss of 30-35 pips, and our first take profit is going to be approximately at the level of 1.4470 level, and second take profit is gonna be at 1.4435 level. Finally, last but not least, I will be looking for exiting this position at 1.4370 level overall. This is for cable. I'm gonna pass on to hourly time frame to define this level and see whether or not this level is a really reliable level or not. So we just go a little backwards to see 100 level, how it is acting, why I did not just place it below. So we can see that historically the 100 level has been a strong support / resistance level. Over here you can see it breaks, it corrects. So that's the main reason why we look for a short position possibly from there on, or exiting our current long positions at that level. So that's the main reason why we look into the market from that perspective. Additionally, you have to understand this position that I just talked about, a short from 100 level, is not a swing position. It is a short-term correction wave, as the main market development is on the bullish side, which means that if we see the price hitting the, not touching the 100 level before the market develops, and we see a potential retracement back to 88% Fibonacci retracement zone, which is the weekly main Fibonacci retracement zone at 1.4339 level, this level. We could also consider potential long opportunity there as well. Your stop loss needs to be at that case, well, your entry should be at 1.4330 level, while your stop loss should be at 1.4295, and your take profit should be at 43.75, 44.30, and 45.25 level overall for the cable bullish entries. So we look basically two sides. If it touches first to 1.4325 level, we short it. If it touches to 1.4335 level, we long it. So whichever one happens first, we will follow that one overall. We move on to USD Canadian dollar. This is the pair much correlated with the oil prices, and it's not really always colliding with the Fibonacci wave. So therefore I draw the Fibonacci on this pair on monthly time frame, not weekly, and we are just gonna start right away from the daily time frame. At the moment we can see that the pair is finding itself a support close to 1.26 level, and overall we can see that this is potentially similar to the previous correction waves that it had. So I'm expecting the pair to not hold at this level, but continue its bearish move a little further. Basically a fake breakout of 88% Fibonacci retracement zone. So I do expect the pair to touch to 1.2502 level. Once again, a break below 88%, but not a real powerful break below. It would be a fake break below, and therefore we would be expecting to see or to touch at 1.2502 level. If you would like to go against the trend, which I would in this case, we would be looking for entry at that level, bullish entry with 40-45 pips of stop loss, and take profit level of initially to 300 pips to 1.28 level. That would be immediate target for me, but overall my main target for this pair would stand at 1.2995 level in general. Moving on to USD Japanese yen, we can see that let's see over here. First thing, we need to define the Fibonacci wave, and this is the Fibonacci wave that I like to look at, for the fact that it looks and it acts well for my outlook in general. And we can see that overall last week's call that I gave to enter at 1.0820 level with a stop loss at 1.0765 level has been holding. So we are so far, if you are following that entry, we are so far at 350 pips plus in this pair. But are we going to be continuing on this market development, or it's the end of the bullish correction wave? That's the main question. To do so, we need to find out the price action development on hourly time frame, and we can see that overall and also daily time frame. On daily time frame, we can see that moving averages are sloping downwards. MACD is below the zero line. While let's also take a look at into the RSI as well. RSI just broke above the 50 level, which is possibly a bullish development wave. So it gives us an opportunity to see or to look into possible bearish entries for the pair. And if we go on hourly time frame, we can see that moving averages are on bullish side. MACD is above the zero line, RSI is above the 50 line, and therefore we can also see that there is an immediate resistance level at the level of 110.50 level, which is pretty much colliding with 50-hour moving average. Therefore, I would expect this pair to reverse from 110.45, 110.55 level overall, and I believe that it would be a strong level to look for. Let me draw that level with a trend line for you. So 110 level overall, 110.45 level. You can see that this is the level in general strong in history we have to look into. So it's very close to the historic resistance and support level. This is the level. It's only 40 pips from the historic resistance at 109.80 level. And if you go backwards, you'll see multiple other testing as well. So therefore, I believe that it's going to be a wise idea to consider to enter close to this level. And my entry level for this pair would be at possibly 110.35 level with a stop loss of 40-45 pips, and take profit immediately standing at the highest high of Fridays at 111.80 level. And second take profit would be at 112.90 level, which is 138.2%. And last but not least, I would be looking for 110 level of Fibonacci, which is at 115.20 level. So those of you wondering about how I draw the Fibonacci, I look for Fibonacci numbers. It's a complete training series that I would I would have to give you in order to explain how I draw the Fibonacci levels. But this is the Fibonacci level that I have over here. In my book, Forex Not for Dummies, which is going to be published, I can already give you the date. It's exactly 9 weeks from now. The book is planned to be published. 2, 3, 4, 5, 6. It's expected to be published approximately on the 27th of June of this year. So you can expect to see the book there, and I cover there in details how I draw the Fibonacci levels, with which gives me the entry points of 90 to 95% accuracy in general. So for now, only thing I can tell you is that for USD Japanese yen, we cover the highest high of the weekly candle of August the 16th last year, to the lowest low of the weekly candle of August the 23rd last year. And we basically would be looking for entry point at or below 110.40 level, with stop loss of 35 to 40 pips, and take profit targets towards 110% or above levels. Once again, why I draw these levels for Fibonacci? Because I'm afraid to break it for you that whomever you are talking about Fibonacci out there, they have no clue about how Fibonacci works. I have done non-stop research about Fibonacci for the last close to 5-6 years, trying to understand the Fibonacci sequences in general. If most of the people that you're going to be talking to will tell you that combine the highs to lows, etc., but it's not really the levels that will give you the entries. It's just a stupid loser way of doing analysis, which will not give you the clear entry levels. Therefore, in my research, I found out that there are certain approved correct Fibonacci waves which are uninterrupted. Like this is one Fibonacci wave, 3 candles. There is another one over here. This is also a good Fibonacci wave, 3 candles. This is a potential Fibonacci wave with 2 candles, but there are some candles that give you an even better wave, and you need to read the book in order to understand the correct definition of it, or follow one of my upcoming Fibonacci trainings where you will be able to understand these levels more in details properly. So therefore I'll pass the explanation of the Fibonacci for now, but we will move on to weekly time frame on Australian dollar, New Zealand dollar, as it was requested by one of you guys. I have not analyzed this pair yet, so I need to look for a candlestick formation for a proper Fibonacci wave. So it's just gonna be taking me some time. I'm looking for 5 candles of the same direction first. If I have it, it's the perfect wave for us. 1, 2, 3, 4. Not the perfect one. 1, 2, 3, 4. Not the perfect one. 5, 6, 7, 8. Seems like this is the perfect wave that we have. It's the Fibonacci wave over here. I'll first look into this one, and the way I define it is that it needs to bounce off the from 61.8. So it has done so. This is the perfect wave for us, and we believe that it's well, at least I believe that it's the perfect wave to consider. I will add just here another wave to my Fibonacci. It will be negative 0.10%. So let's look into this level to see what we could expect from Australian dollar, New Zealand dollar. Once again, I don't really trade this pair much, but well, your request is more important for me. On weekly time frame, we can see that the pair is MACD is above the zero line, bullish target. We have conflict of 2 moving average. One is showing upwards, another showing downwards. I call this moving average sandwich. So it's an indecisive market movement. Therefore, I'll move on to daily time frame to see where is the main target at. Again, on daily time frame, we have the moving average conflict. One is flat, kind of sloping downwards. It's 200 moving average. Another one showing upwards. MACD is sloping upwards above zero line. And there is a divergence on RSI that catches my attention right away. And we can move on to hourly time frame to see the exact market development on this pair. What is it that we could consider for the pair? The divergence that I was talking about still occurs over here. We have, while the market is making a higher high, we have a lower low on RSI. So therefore, what we'll try for this pair is gonna be, if we see a break below, which is happening right now, of the 50 moving average, we will be going for a short for this pair, and my initial target will be just to the level of 10% Fibonacci retracement zone, which is at 1.12 level. But my main target for this pair would be at for intraday time frame 1.1155 level, which is also justified by the support resistance level over here. The previous week's gap also justifies it as well. And overall, the most important support that I can see on daily time frame for the pair, if you go a little backwards, would be at the level of 38.2% over here, or actually at 1.10 level, which would be a psychological support zone. So I would expect to short the pair for today, and target overall for today, tomorrow, towards the level of 110.50 level for Australian dollar, New Zealand dollar.